Hey there and welcome. Thanks for your interest in the auction bars. We'll first talk generally here about the premise of technical analysis and reversal patterns that reflect the emotional response of traders. Just to give you some background info and put the concept behind the auction bars in context, and then move on to show you what this is all about. So the general idea is to locate objective price benchmarks that are widely known and accepted. In a sense, we're looking to establish a self-fulfilling prophecy where a critical mass of traders will respond in a coordinated way to the same price levels at the same time. For example, you might ask yourself why we often see a pullback following the first test of the overnight high or a bounce at the first test of the pre-session low. Well, that is, of course, because there is a critical mass of traders responding in a coordinated way when they identify setups around these levels. So this is a 15-minute chart of the NASDAQ contract, and we see that there is very little room for interpretation when we're talking about the overnight low and high levels. They are objectively the most recent support and resistance levels set during the Asian and European sessions. Of course, yesterday's high, low, and close are just as obvious and important, but the overnight high and low are the most recent reference levels, so I generally like to have those on my chart somewhere. So that is the logical part, but as we all know, there's also a emotional aspect associated with trading, and a very significant one according to the 80-20 rule, which claims that the market is 80% psychological versus 20% logical. The idea here is that price patterns are a direct result of human decisions, and that is true for algorithmic trading as well, because they are, of course, programmed by humans. Or if you have something that is made by artificial intelligence, those are systems that are built to take advantage of patterns seen in human psychology. So important aspect to be aware of when it comes to our decision-making process. A lot of it can be traced back to the lizard brain, which is responsible for triggering the primitive survival instincts. So that's the fight or flight type of thinking. Of course, we think we're much smarter than people who lived 1,000 years ago, but in evolutionary terms, our brains work, or they don't work, pretty much the same way as back then. And that is why history has a tendency to repeat itself, not perfectly, of course, but chart patterns of the past can certainly predict what type of price movement to expect next. And that is because the psychological aspects of trading remain the same year after year. Our emotional response just don't change all that much. We remain greedy, fearful, confident, or terrified. And this emotional response is what we see in reversal patterns on experienced traders that went for a breakout trade up here just after the open from the pre-session high, might have gotten trapped and then entered the freeze phase here, where you know you should get out, but you don't because you hope it will come back. Of course, that only adds to the reversal momentum once the trapped traders are forced to sell. So the horizontal lines that we see here are the auction ranges, a very important part of the auction bars concept. They are higher time frame ranges, in this case based on a 60-minute time frame. And the market is ranging some 80% of the time, so we're looking for reversal patterns at these higher time frames. And if prices close outside a 60-minute auction range, the high and the low of the previous 60-minute range is located, And so this new range here is then established. As for trade setups, we see a bullish spike setup here, right outside the edge of the new auction range. And coming up here, we'll have a look at what these price patterns tell us about market participants and how they're defined. There is a old Japanese saying that a spike that sticks out is very likely to get hit by a hammer. And that points out the fact that these patterns are pretty easy to spot on the charts, and there's a good chance that a lot of traders will act on them. And what the pattern tells us is that prices saw an extreme move within a short time span, only to be rejected at a certain level and pushed back to where the candle opened. So for bearish spikes, we want the upper shadow to be much longer than the candle body and the lower shadow, whereas for a bullish spike, it's the other way around. We want to have a lower shadow, which is longer than the candle body and the upper shadow. Here we've moved on to a 15-minute chart of the Euro futures contract 6E and adjusted the higher time frame range to 240 minutes. Generally, you'll want to use a multiple of 10 to 20 times of your primary bars for the auction ranges. Again, these horizontal lines are the auction ranges. And so the main idea here is to identify reversal patterns around these higher time frame ranges. And once the close is outside the completion of this 240-minute period, we have a new auction range, and you can also tell a lot how the market responds to these ranges. In the beginning of the session here, the market didn't even make it up to test this mid-range here, broke out a pretty insignificant breakouts here, but referencing this range here. Then coming up here and seeing a reversal outside this new auction range, which coincides with the mid-range of the previous auction range. And then just continuing down here, never really finding support here. Yeah, just a very clear down momentum on this. Not a good scenario to look for bullish reversals. This is not a scenario where you would trade these. There's a lot more going on in the background here than defining the higher time frame ranges and the high, low, and close of the primary bar series. We can also define or look at the significance of the range and volume. So that should be average or above average for the spike bars. You can also define the minimum shadow size for your spike bars. So X percentage size of the bars in reference to the immediate bars coming before it. And then a swing trend definition by a zigzag filter, as we see here, marking the higher highs and lower lows of the last n bars. You can also add further information here, the number of pips or ticks and the swing volume. You see also these arrows here, and they refer to the actual trade signals. So on your charts, you will see when this is showing up here, first a C1, that's a candidate, and then once this low here is broken, then it converts into a signal. Conversely, for the bullish spikes, you will have a C here until this high is triggered. So just to repeat, you confirm the candidates once the price moves above the high of the setup bar for the long scenario. So you have to see price action take out the high of the reversal candidate in order to open a position. The confirmation does not have to occur directly on the next bar. You can set the trigger to occur within a specific time window. By default, we've set the high to trigger within the next 5 bars from when the candidate plotted. And if that is not taken out, then the candidate will disappear and you will no longer see it on your chart. Finally, once a signal is triggered, the stop loss is set immediately below or above the reversal signal. So here we have the bearish stop defined here above the high of the signal bar, and then the trigger is here at the breaking of this low of this candidate bar. Okay, so that's for the general overview of the spikes. We'll have a look at the key reversal patterns as well. They also identify price rejection, but they're not as easy to spot on the chart as the spikes because we're analyzing the high, low, and the close of the current bar, comparing it to the previous one. Basically, we have three key reversal types, A, B, and C. And for a bearish type A, we're looking for a higher high than the previous, followed by a lower close. The B and C reversal types have a stricter definition, a close below the low of the previous bar, for example, here. But for now, we'll just use the type A as an example here. For reversal up, it's the inverse. So we're looking for a lower low and then a higher close than the previous one. Here we have a ES chart. 5 minutes with 60-minute auction ranges. We see here a lower low and a higher close than the previous one. This is even a close above the prior high. Plotting here at the lower edge of the range. Brief resistance here at the mid-range before breaking the higher end of the range. Stopping at the prior close here from yesterday. A higher high here and a lower close than the previous bar, marking a down reversal pattern. And here we see that arrow that I mentioned earlier. This is a candidate all the way until this bar here. So the signal is triggered here, then with a stop above the highest bar in the look-back period. You can also define specific properties of the reversal bars by looking at the range and volume of the reversal bars, the swing trend definition, and the most important filter for the auction bars is where the reversal bars actually plot. So you will see bullish reversals at the lower range and bearish at the upper range. You can also set it to plot outside the range, which is the case here, and you can also activate signals for the mid-range here. So now we'll go into the chart and have a look at some of the options that are available to you. Here we have a 5-minute chart of the Euro futures contract again. Very good bullish reversal pattern here. Let's go into the indicator dialog box, and then you can see here the auction ranges are based on a 60-minute bar period. You can also choose daily, weekly, and monthly auction range. For those, you have to add more data in your look-back period. And then you have different options here. I'm not going to go through all of them. The most important ones are the definition that you have of spike patterns, so you can choose only spike bars. I've have this set for spike or reversal type A. And then the filter of the auction range, where do you want the reversal patterns to plot? So I've set this at the range or the congestion zone or outside. You can also change this to include the mid-range, as I mentioned. And important with these patterns is that you also have an overview of the general market action. So here we have a 60-minute chart of the Euro futures contract. And I've set this to plot daily bars. So you see here I have the auction ranges input for daily bars. And in this scenario, you wouldn't really go for bearish reversals or spikes because we have a consistent breaking of the auction ranges to the upside here. So you would be looking in those scenarios for bullish reversals and bullish spikes. One final thing that I would like to show you is the option of including so-called composite reversal signals. Those are reversal signals that plot on 2 bars. So basically a 5-minute chart is here, then converted in a 10-minute chart. And you can activate that to alert of additional setups and signals. And so the composite bar reversal option is activated here now. And here we see a spike, which is plotting both in the 5-minute chart and the 10-minute chart. Here we have a reversal pattern, which is plotting on these 2 bars here. And so this gives you a little bit more trading opportunities to consider. So the composite bars then are always R2, and the single reversal bars that occur for the primary bar series in a 5-minute chart are R1s. All right, so with that, I think I'm going to wrap up my presentation here. Thanks for checking in. If you have any questions for me, feel free to reach out at info@listed-indicators.com. Otherwise, drop me a line in the contact form over at Listed Indicators. Look forward to hearing from you. Until then, take care and bye-bye.